Global risks, local solutions. So let's start this way. Let's start this way. People on this side, where I'm facing, once I say go for it, you will echo global risks. It's because I know you are not too plenty on this side, though. But I want your voice to overwhelm them on that side. People on that side, you will respond by saying local solutions. Are we ready? Let's go. No, you didn't say it well. I mean, when I say let's go, just echo it, say with the loudest voice that you got, okay? Let's go. Excellent. And this side? You know you are more than them, but your voice is still weak. So let's try it again. This side? No, now. I'll call one person to just say it now on behalf of all of us. We're not speaking it loud. Are we ready? I won't reverse it, don't worry, because it's solutions we need more than the risks. Let's go. All right, I think we're coming up. 2 more times. Let's go. Last time. All right, thank you very much. And this is what we're going to do this morning. I've said yesterday, and in case you didn't join us yesterday, if you're here and you are from the same organization, please don't sit together. In this conference, we want you to manage that risk of not sitting together. And I'll tell you why. You're supposed to network. You're supposed to make new friends. Yesterday, we made 3 new friends in the minimum. So today, we will make 4. So it will be minimum of 7. So I'll give you 2 minutes to meet 4 new people that you have not known before. Let's go round. You can stand up. Your load is secured. Your packages are secured. Please stand up. Meet 4 new people you did not know before. 4 to make 7. Walk around. Network. You don't know when this net will work. All right? Meet people you did not know before. Get their cards. Get their numbers. Get to know what they do, where they work. And you don't know when it will be necessary for you to connect again. And as you connect again, then it will be an opportunity to advance the solutions we are exploring here today. Meet new people, minimum of 4. Minimum of 4. Minimum 4. You can do better than 4. You can do 5. You can do 6. You can do 7. You can do 8. But minimum is 4. Minimum is 4. Some people are not getting up at all. You must get up. You must get up and meet people. Okay. Get up and meet people. Four people. 4. Some of you are still standing in one place. Leave the place. Moses Eze, leave that place. Go and meet 4 people. Four people. 4. I'll soon ask you now. Choose some people at random to ask. All right? This is networking. And the reason is that we will need this network down the line in exploring those solutions. We will need this network. You will need this network. Take note of the person's name, the person's numbers, what the person is doing right now, and what else the person will do. All right? 4 people. 4. Okay, yeah. Meet 4 people, 4 people, 4 people. The time will soon be cut off. Move round. Meet 4 new people, people you did not know before. Oh, yep. So make it 4, 5, 6, 7, minimum of 4. All right, let's begin to wrap up. I will call 2 people. They will show me these 4 people they have met today. The 4 people they have met today. Good morning, sir. I'm staying near you. Introduce yourself to all of us and tell us the 4 new people you have networked with today. Sorry, gentlemen and ladies, we can suspend the networking. So please, let's sit down. We're starting almost immediately. Let's sit down.
So I met Sam from IFRS. I met Ijoma from CBN. Then I met Oluchi also. And then I'm meeting you, Soji.
All right, ladies and gentlemen, we may be seated now. Please, let's be seated. Thank you. I appreciate you for coming early. Please, let's be seated. Let's be seated. Let's be seated. There is something that all of us we have received as we came in this morning. As you came in this morning at the registration center, they gave you something. Have you seen the thing they gave you? Have you seen it? For me, I think we need to celebrate. Apologize for that. Okay. So let's do something. Do you have a copy of this? Do you have a copy of this? I need the cameraman in front. Cameraman, please come. I'd like you to take everybody. This is purely innovative from CRMI. And I want us to celebrate the Chartered Risk Management Institute for putting this together. Can we all rise? Where's the cameraman? Please come to the front. We will wave it like this. All right? We'll wave it like this. Let's all rise, let's all rise, let's all rise. Can we all rise? We had a program yesterday, and straight away resuming today, it has been produced in some bit of summary. I think this is quite inspiring, impactful, and it's a welcome development. So shall we raise it up and say, thank you, CRMI. One more time. Thank you, CRMI. We love this. We want more of this. Thank you. Thank you. Listen, let's be seated. Thank you very much. So let me single out the chairman of the planning committee, Mr. B. Olagbami. Please stand. Please face the crowd. This is the man that led all the planning. Can we celebrate him? The Executive Director, Chief Risk Officer at EcoBank. Thank you very much. We love this, and we celebrate you. We'll celebrate the President, Chairman of Council, and all members of Council for approving this. Let's celebrate the President and Chairman of Council and all members of Council. Thank you. All right, so what we'll do now is based on this. And you know, somebody said something, and I want us to prove that person wrong. He said, if you don't want people to know something, if you don't want people to know something, put it in a book. Put it out like this, because they will not know it. Do you know why? They won't read it. So let's disappoint that person. Let's read this. I'm sure we'll get the soft copies as well, either on our email or through our various WhatsApp groups. But this is good, and it just keeps us refreshed. Before I call the person that will do the formal recap, I'd like 3 people to volunteer to say to the whole house what they took away from the sessions yesterday. You will not be able to tell us everything, but one or two that touched you in a special way yesterday. We gathered together yesterday to discuss global risks, local solutions, and we touched on different aspects of our lives, different aspects of our endeavors. 1, 2, 3 people max. Just tell us one or two things you learned or relearned or unlearned or decided. Oh God, I appreciate this person. So that's number one. Let's celebrate him. Number one. Number two, so have gender balance and gender imbalance. Okay, so I have 4. I'll tell you 4. So I'll make it gender balance. 1, 2, 3, 4. I've seen you. So tell us your name, tell us what you do, and tell us those quick things you like us to take note of.
Thank you very much. My name is Israel Lekiko. I'm a staff of Steplat Energy PLC. I'm a member of the Enterprise Risk Management team at Steplat Energy. One of the striking moments for me during the session yesterday was the session that was dealt by the personnel from the Statistics Office, the National Statistics Office. I got deeper insights into key risks.
Dr. Muda Yusuf. Please celebrate him as he comes. Don't stop clapping until he gets here. Keep clapping. Keep clapping. I'm not feeling you at the back. Thank you, sir.
Good morning, everyone. It's a great pleasure to be with you here this morning. And it's also even a greater pleasure to be involved in the discussion of a very, very important topic. Because when we are operating in a very volatile domestic and global environment, risk management becomes a very, very critical thing, which can make or mar any organization. So this is a very, very important conversation we are having this morning. And as we have been told, the session today is focusing on managing country risk, a collaborative approach. And the sense in this theme is that it is not all the time that we'll be operating or relating as competitors. It is important once in a while to collaborate, because when we collaborate, it's for the benefit of everyone. Competition is about the benefit for individual companies, but collaboration is for the benefit of everyone. It's for the stability of the entire system in which we all operate. So that is why this theme today is about country risk and collaboration. The overall theme is about global risk and local solutions. Again, what is very striking about that theme is that we should learn to localize solutions in whatever we do. Even in policy formulation, in economic reforms, in regulatory reforms, it is important to recognize the peculiarities of our own conditions, so that whatever policies we are putting in place, whether it is in risk, whether it is a monetary policy, whether it's in fiscal policy, we should localize those solutions so that policies and solutions can be fit for purpose. That is the essential things about the theme, both the general theme and the theme that we are having today. So today we'll be discussing country risk. And country risk is about risks that are peculiar, to each country. And of course, in our own country, we have risks that are peculiar to us. So that is why sometimes when we see some risk analysis, done by foreign firms or foreign organizations, we see that sometimes it doesn't properly apply to us. So we are in a better position to craft our own solution. And of course, you have a range of what you can call country risk. You have what you call the political risk. I'm sure you must have discussed some of this yesterday, which has to do with how the political environment can create a major risk for businesses. And of course, we'll be having conversations on how to manage such risk. But more importantly is to discuss what you can regard as economic risk. And I'm very happy that one of our panelists is a highly respected, esteemed corporate governance and risk management guru, who happily is now sitting atop one of the biggest financial institutions in Africa. So we'll be sharing a lot of experience with us. So we'll be looking at the components of that risk.
Inflation. And people need to cope. So if exchange rate should move from 460 to 1,600, almost 3 times, right, or 4 times, you expect inflation in the economy to also go up. People will react. And because most of the raw materials that we have, most of the things we sell in Nigeria are all imported. Imported inflation came into being. But base year effect will neutralize those things as we move by. And then people will adjust. As we were taught in economics, people here are the ones that will be hit most. Because we're all salary earners, right? But the welders, the vulcanizers, the transporters, they've already priced things into it, they moved on. We are the one feeling the heat, and that's where the whole thing. So if you see people complaining so much, it will be people who earn salaries like ours. But be that as it may, when you fix it, the long-term impact is always positive. So at least for the first time in Nigeria, or in the last 30 years or so, we are seeing a refinery working in Nigeria, right? We're seeing limited importation of petroleum products, and I said it, and I'm repeating. The day that subsidy was taken out, I wrote that economic miracle has started in Nigeria. And so and I believe, honestly, because if $700 million is being saved monthly from subsidy, in a year, that's about $8.4 billion. It means a lot. And for what we've been seeing, deeper impact are coming in. And why not being, so that you won't say, because maybe it's an executive, that's why it's not feeling the pain. I can see, people will say that, but I'm also feeling the pain. I'm seeing everywhere. Every day, your phone will be ringing. People have to call you. But it's just cultural. But Nigerians need to change. We need to change as a people. Productivity needs to increase. There's no need for anybody lazing around thinking that somebody will have to dash him money to survive rather than him working. How many young people go to farm? How do we want to feed ourselves? How many people wants to labor? How many people wants to go and do whatever they want to do, yahoo, and make money? How do you want to run the country? So we must need to fix it. Everybody need to face the fact that we need to adjust, and then we move forward. That to me is a practical way. And I've seen governments, the Bank of Agri is about to be capitalized by about 1 trillion or 1.5 trillion. BOI is running on the other side. CBN is running on this other side. Ministry of Finance is doing many things. I'm seeing something on solar cooking pot, whatever, coming up. Trader money coming up. And I know there's something coming up on mortgage. There is credit going on to civil servants through the credit program. So a lot of things coming, shaping the system, and transformation will always, it takes time to embed, but when it settles, it shapes things up.
Thank you very much. Once again, can we appreciate the... Now, Dr. Ozemene, you have witnessed the economic reforms in the last 2 years. From where you stand, what kind of risk has these reforms created, especially for businesses? And how do you think we can deal with such risks? Dr. Zeman.
Thank you. You know, I wear several hats, so I'll try to speak from different perspectives. So I'll start from my perspective as a risk manager, right? And I'll, at some point, segue, approach it from an academic standpoint, right? And then I'll speak as a Nigerian. Okay, so a couple of things. Today, we discussed the high lending rates in the country today. The question would then be, why are interest rates high? Oftentimes we hear politicians say, no, we must force lending to single digits in the country. We must ensure that, you know, the SMEs are not asphyxiated and they can finance the operations. But when I started my banking career in the late 1990s, cash reserve requirement for banks was 1%, right? I think we moved to 2% during Soludo's consolidation. And at the time, I believe part of the thinking was because banks had just recently raised capital, they didn't want to put significant pressure, inflation pressure in the market, etc. But today, CRR is not at an all-time high. At 50%, for instance, at some point in this market, CRR was almost 80%. I mean, if you look at when we are doing differentiated dynamic cash reserve requirements, what that means is that CRR is a tax on banks, and banks must pass on that tax, right, to the lender, right, or to the borrower rather. So when you add all the other costs of operating a business, operating a bank, NDIC premium and all those other things, what you then find, AMCOM resolution costs, etc. What you then find is that you are operating in a market where, in some instances, retail borrowers are borrowing at over 40%. These are facilities that are primed for default. What nature of profits is the borrower going to make to be able to repay that facility? And, okay, so I also have responsibilities across Africa. I sit on some boards of financial institutions in different African countries. And I'll use Kenya as an example, where today, because of similar instances, you know, Africa is almost like evolution. Leaders are operating from the same playbook, so they're making the same mistakes across whatever. So when you are targeting inflation, when you are using monetary policy tools to target inflation, right, and exchange rates, right, what tends to happen is that the lending rates get to the highest level possibly in those markets, and you begin to see defaults across the sectors. Kenya, as far as I'm concerned, is a fiasco. I've had an institution where I had to write off 80% of the book, right, because of defaults. What triggered the default? Exchange rate, lending rates almost doubled overnight. And people were simply not making enough money to repay, right? Even in instances where the individuals wanted to repay. So, from my standpoint, we have had positive reforms, but we need to strike a balance, right, on so that we are not digging a hole to fill a hole, right? We have stabilized exchange rates. How did we stabilize exchange rates? We have been mopping up liquidity in the market, right? And we raised interest rates such that there's significant inflow of foreign portfolio investments. As always, anytime I see significant inflow of foreign portfolio investments traditionally in Nigeria, and which is corresponding with an increase in foreign reserves, is a red flag for me, right? It means that we are taking in hot money to stabilize our exchange rate, and to do that, we need to increase interest rates, and as we are doing that, we are asphyxiating the real sector. That always happens. The only way the reforms can be sustainable is that while it's execution, because today this is not the first time we've seen an array of reforms across administrations, right? It's our capacity to execute and ensure that all those projects in silos achieve the ultimate objective. Otherwise, 2 years down the line, 3 years down the line, 4 years down the line, we'll see some of those things unwinding, and we can potentially see, I'm not saying, we are all race people here, don't go up. We can potentially see a situation where defaults in banks' books will lead to another financial crisis. That's one. The second thing I see from the reform perspective is around, for a lack of a better phrase, what I would call policy stability. A few years ago, we were encouraging entrepreneurs to invest in the agricultural sector, processing, etc., etc. We were celebrating the biggest rice mills in West Africa, a flurry of mills and processing plants across the country. Banks, financial institutions invested or financed those projects. And a few months down the line, we threw open the borders once again. And it has led to a fiasco in those places. So now we have a few rice mills and other mills that we celebrated a few years ago that are now moribund. Those assets are festering in the books of financial institutions. And if we don't solve that problem, right, in a few months or years, we'll be writing them down. What does that do from a policy standpoint? It means that financial institutions who are already facing this, having to lend to a market where there is volatility, where there's high interest rates, are beginning to question whether they should move ahead and support some of these initiatives, knowing that somebody will come tomorrow and unwind them. So to ensure that banks feel comfortable to participate in some of these initiatives, there has to be some level of assurance of policy stability. Otherwise, what we'll see is write-downs in a few years' time. Thank you.
Thank you very much. Thank you.
All right, now the president of the Chartered Risk Management Institute of Nigeria, the CRMI, Kevin Ugwoke, is emphasizing the importance of risk management in policy decisions, stressing the need to integrate it into policy development rather than treating it as an afterthought. He stated this at a conference held in Lagos. Meanwhile, stakeholders such as the Central Bank of Nigeria, Yemi Cardoso, who was represented by Dr. Blaze Ijabo, the Director of Risk Management, discussed the need for risk awareness in both the private and public sectors.
This kind of event that we host, the idea really is to bring people from all walks of life, all key sectors of the economy, both regulators, participants, workers, name it. Bring everybody together, discuss around common issues that we can face and how we can navigate through those issues so that we can hear from whether it's the regulators, whether it's those being regulated. There can be a sharing of minds, and at the end of the day, we leave the place better informed, enlightened, and able to take right responses to whatever challenges we may face out there.
Why we've come together today is to look at how those risks that emanate globally, internationally, how they come back and bite us, and what kind of local solutions do we have here. What we have discovered is that the most enduring, the most effective solutions are actually not far away. They're here with us domestically.
What I hope participants to take away from here today, judging from the enthusiasm that we see and from the questions and from the level of participation and the energy in the room, we expect that people would go, take models that have worked elsewhere and see how we can adopt it locally, and how could that be able to help us to also solve our local problems, and at the same time equip us with local methods of dealing with issues, especially when it comes to building resilience in our organizations and institutions.
In fixing global risks that have impact on us, no one organization, no one person can do it alone. There's a need for collaboration between the fiscal authority and monetary authority, between the public sector and the private sector, between the professional bodies and industry. And this kind of conference is a veritable platform for these collaborations to be built and to be developed, for industry to speak to regulators, for regulators to speak to industry, for the government on the fiscal and the monetary side to speak to each other, to understand where these risks are coming from, what the risks are, and how we are going to fix them with local solutions that work for all of us and that will minimize the risk for all of us.